You guys, good evening. Sunday night, August 7th, and just wanted to take a look at a few markets here this evening. So we have kind of a wrap up from last week and kind of what we're thinking about this week. But if we start with stocks, let's just do a top down. So if we look at the E-mini S&P 500, when I highlight the wave structure here, you can see we're still green. Everything's pointing up and to the right, and we're still in a long-term uptrend. So we do need to be aware that we're pretty high within the monthly cycle. So I mean, these readings are 95, 96. The market's on a monthly time frame, it tends to struggle when we get up above 90. So there was some divergence here first, meaning that the trend of this cycle rolled over and down before price rolled over in 2007. But we can see, here the cycle was high. It didn't really matter. Price continued to go higher coming out of the 2009 lows, even as the cycle rolled over and bottomed down here in September. But then you can see in 2011 the market kind of stalled when we get high within the cycle. Same thing, we had a 3-month pullback, the top of the cycle here in 2012. Not so much in 2013. You kind of made this intraday candle move higher, and then you came back down, but wasn't much of a rollover. And then the same thing here, we're pretty high within the monthly cycle. So what I want you to notice is this hasn't rolled over just yet, so this could still invert, and we may need some more time before that rolls over. And of course, it is worth noting that we had a monthly close for July above the highs from last year. So this is still in a bullish posture, long-term uptrend. And on the weekly level, I'm going to start highlighting the TMS lines, which is TMS is technical market structure, so that shows us the trend. When I make higher lows at or near the 30 in an uptrend, those are the main pivots. So on the weekly level, the main low is the post-Brexit lows, which is down around June. And then we can see on an intermediate term perspective, I kept talking about 2050 level. It was because this was the area on the intermediate term that we were making higher lows. So I really wanted to see a daily closing below this TMS line, and we never got it. And that kind of allowed us to move back to new highs. So it's pretty tough to be short S&Ps, and it's pretty tough to be bearish. The trend's still bullish long term, intermediate term. So, I still have a few puts here against some of our longs, and I might start taking some of those off. It's just this move to new highs is pretty bullish, so I don't want to get aggressively long up here. But we can see in the Dow, stocks have just been so strong all year. Anytime we get a dip, it just pays the, it kind of depends how you play it. But I have longer term puts on the S&P, but I like buying the dips in Dow futures. And we got a couple last week that we were getting involved in on the long side. You can see that on the 4-hour and the hourly chart here. So we're a little bit overbought intermediate term. This is the 4-hour chart. You can see that the cycle is pretty high. So it is what it is. So don't lift them up here. Don't chase them. And the Dow still has this resistance, 18,565. You could play a short there. It's just I don't like really shorting these trends that are long-term bullish. So, I'm still long some Dow futures, and I'll probably take half off into these highs and see if we can get a new higher high, and then you can get back involved on the long side on the hourly chart here. So we can see this 200 is still positive, ascending, same with the pi line, so this cycle is still bullish. And any type of pullback, you want to keep an eye on this 30 here on the 4-hour. That's coming in around 18,003 1/4. So that's the right spot to buy a dip. I think I'm long from right there also. It's the same thing on the NASDAQ. I mean, stocks are just gone. NASDAQ looks great long term. I don't know if you, I mean, I don't think you chase them long up here, but I mean, I had a short on from here, big picture, and I just took it all off Friday, making new highs up here. But we had a shot of rolling over, and we only could produce one down day, and that's been probably our worst position, being short the NASDAQ. So we took that off. It was worth a shot into these highs, but we probably, you know, the market ran the stops through here. Maybe it'll chop or do some work before rolling over. But I wanted to see more follow through. This is just one day down. We couldn't even roll back over, so there's not much to play there from the short side anymore. It's okay to stop out or cut your risk. I pretty much cover stocks. If we look at 30-year futures, I'm still long there, still bullish. We sold well late in the week and then put some stuff back on. I think we're going to test these lows though now from July 21st. Alright, this pi cycle's down around 170.5. That's just from my time doing this. It just looks like that's about the right amount of time and space to pull back toward. So I'm going to be buyer 170.5. If you look at the daily chart, we're still in a nice uptrend. The wave structure is still bullish. The cycle is pretty low, so I'd rather be thinking on the long side again. But we'll see when. If we don't hold this low, then we might test. Yeah, the July 21st low is like 170, 169.31. So I think the 30-year will probably want to hold in this area around 170. Maybe we'll push it a little lower to the bottom of these bands. But you want to be a buyer there. And then your risk, you know, longer term. If I have a core swing position on, maybe you risk a point or two. But you want to see it hold this area. Otherwise, I would stop or take off most of my intermediate term long, and maybe just play a really small position against everything else in the portfolio long term. Because if you break here, you can get a move back to 162.30, 159.5. So point being, if you can't hold this, then you got to just step aside because you're going to get a move back to this 200 or even down here to pi. So you don't want to be dragging this risk all the way down here. Alright, that's just way too costly. So let's look for that area to hold this week. But overall, 30-year looks great. That's still one of the best places to be long. And then same thing with gold. The cycle kind of rolled over to start the week last week, and then maybe it can finish the job a little bit lower. So you can see this is all our buys over the last several weeks. It's been a nice trade. I think we got to be a little bit patient now. You might have some more follow through back to this like 1311 area. And that's the higher low on the TMS. That's the TMS pivot, 1311. If you break that, you should test these lower bands or the higher lows here, which is probably on the weekly level, 1250. Yeah, 1200. Here's the 30 week moving average. So that's the thinking. If you just keep moving along to see what's next. If you break 1311, you should probably test the 30, which is 1260, or these higher lows at 1200. But I mean, this was a pretty good sell-off Friday. The market may want to come back here, 1300, 1311, 1320 area. So that's where you want to have most of your size. We'll be, I mean, I took a lot off. I took a lot off up here. So I got some room to buy. I want to get long back here, 13 and a quarter, 13.11. That's where I want to get most of my size back on. Yes, I think that's probably all we'll cover for this week. I mean, stocks, bonds, gold. Obviously, there's a lot of FX to touch on. I guess we can just do the dollar real quick, and then I got to run. But DXY, it looks good. We're making higher lows on the weekly level. So if you step back to the monthly, and when we broke out clearly in 2014, and you had this huge move up, and then we've been kind of digesting this move sideways in a basing form. So the higher low that needed to hold was that 92 area. All right, and as long as dollar index holds 92 long term, it's still going to be very bullish. It's just going to be tough for energy and tough for commodities long term. So 92 still remains a long term pivot. The weekly level, you can see that more of the same. I started to draw this regression channel because that shows you the intermediate term trend. And you can see we're just making higher lows. So I think we made another higher low most likely last week around 95. So I still think the market overall wants to move back towards 99, 100. But that's a clear pivot, 95. If you break that, then we'll revisit these lows from June, 93, and then the lows, again, that major level at 92 could potentially come into play also. So watch 95 for a key area, but we sold the euro there, which is pretty much the same trade. I think I bought some dollar futures in there also. I don't have it on the chart, but dollar still looks bullish, so stay with that. That's working. We're still like shorting the euro, still like shorting the pound, still like the yen from the long side. That 100 level has kind of been key, but I'll touch on that in the morning. I'll go over some more FX in the morning. So I think that does it for tonight. I'll catch up with you guys in the morning.